With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come. Trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, December 13th, 2024. Let's just go ahead and jump into the numbers. Dow Jones down about 1.8% this week. S&P 500 down just over 0.5%, down 0.6%. Now, these things aren't a real big surprise to us. We've been saying the market looks a little extended, maybe due for a little bit of a pullback. Now, NASDAQ, however, bucked the trend. It was up 0.3%. Small cap index, though, down 2.5%. So a lot of give back through the major indices. The only one really hanging in there this week was the NASDAQ composite, also hit an all-time high a couple days ago. Looking at the volatility index, it drifted higher this week, 8.1%. And looking at the volatility index, looking at some of the studies surrounding the VIX, a little concerning down this complacent level. Some of the action in the volatility index kind of suggests the market could be in store for some more volatility. Maybe not between now and the end of the year, but we'll see. Nonetheless, I do think there's a little bit of a concern there. And then looking at long-term bonds as measured by the TLT, they took a hit this week, down 4.5%, the TLT, as rates went higher. And we'll talk about why in just a moment. And then look at the sectors, pretty lousy across the board. Everything down, really, except for semiconductors up a little bit. And really, that's surprising because the big dogs like NVIDIA was down 5, almost 6% on the week. AMD, that was down about 7% on the week. But you had some big winners like in Marvell Technologies. They actually had a big earnings report last week. We actually have Marvell in our aggressive models. We have the AMD in our moderate models. Marvell, though, they had a monster quarter. And then they followed up this week with some more big gains. So that stock was up pretty nicely, up about 10% on the week. But Broadcom, another big chip maker, had a nice strong report also that also went up quite a bit. So the index as a whole was up, but there's a lot of the internals there, stocks within the index that had a pretty lousy week. And then communication services, they had a good week. And you can thank Google for that. Google had an announcement this week regarding a breakthrough in quantum computing. Now, we've got two stocks focused on quantum computing. We've got Google in our moderate growth models. We've got IBM in our moderate models focused on income. Both of these companies are doing a lot of work on quantum computing, and Google announces major breakthrough. They have built this quantum computer that completed this really advanced mathematical calculation, did it in under 5 minutes, whereas a standard supercomputer would take 10 septillion years to complete. 10 septillion, right? We don't even see that type of time in the universe, okay? So 10 septillion for a traditional computer, under 5 minutes for a quantum computer that Google is working on. Now, this does not mean that their quantum computer is a fully functioning computer like the one that you use at home or at work. So we're not on the cusp of something that's going to be total game-changing at the moment. But this technology, and I've been telling clients this for a couple of years now, this quantum technology will be the biggest game changer probably in mankind. It's just insane the speed at which these computers would be able to function. And if they get to the point where they have fully functioning computers at these speeds and you couple that with artificial intelligence, well, then you have to get a little bit worried about the human race surviving that type of computer power, honestly. It's kind of crazy to even think about it. But before we get to that point, maybe a lot of breakthroughs will happen in terms of science and medicine and things along those lines. But we're still far away from all of that. Google's got its own issues. It's actually on my short list of stocks to consider selling, only because they've got a lot of competition coming on board. Perplexity AI, for example, I use that all the time. Perplexity is fantastic. If you're trying to look up some important information, get good quality answers on something a little bit more advanced of a question, use Perplexity AI. It's just absolutely great, where Google is starting to slip in regards to competition. So I think that Google's got a long way to go before quantum computing is their next big moneymaker. I mean, we could be still another 10, 15, 20 years away from that. In the meantime, their main business model does have some pressures. So keeping eyes on that one. So anyway, that's the sectors. Looking at metals, gold up 0.5%, silver down 1.7. What's moving markets this week? Well, mainly inflation. We had the consumer price index earlier this week on Wednesday. It was in line, still, a little on the hot side, pushing that 3% mark. And then we had the producer price index on Thursday, and that was hotter than expected. And that's a concern, right? Because the PPI tends to bleed into the personal consumption expenditures number, the PCE, which is the one that the Fed focuses on the most. And if these numbers remain hot, it really puts the Fed in a bit of conundrum. They've really been projecting all these interest rate cuts. It's going to be hard pressed to see them deliver if inflation is staying sticky. Now, the Fed has another meeting next week, and they'll have another announcement next Wednesday. The market is fully pricing in a 25 basis point cut. So everyone's expecting a 1/4 point cut next week. And I haven't seen the Fed signal otherwise. We've talked a little bit about this on the podcast in the past. When the Fed's going to do something outside of what the market's expecting, it will tend to kind of leak things through back channels, kind of set the stage, let the market start to digest it before they actually make that move or change direction. Not seeing anything that resembles that at this point. So I would anticipate they're going to cut 25 basis points, but I think it's going to be a hawkish cut. I think they're going to cut 25 basis points and they are going to tap the brakes. They are going to suggest that they may not be doing as much in meetings to come because there's elements of the economy that are still really strong and inflation is really sticky. See, we got this issue, this balancing act we've got to do between growth of the economy and keeping inflation at bay. Look, I saw a statistic earlier this week, 87%, okay, follow me on this, 87% of all inflation cycles throughout history have had two peaks, not one, but two. Almost 90% of all inflation cycles have had two peaks. We've only had one. So that's a concern. If inflation ramps back up, that's going to cause some problems. And looking at the incoming administration, some of the policies are being talked about. If a lot of good comes out of this and no bad, let's say tariffs really don't come to fruition. Let's say right now, so far, tariffs are showing themselves to be pretty effective as a negotiating tactic, as a tactic to get people to the table to have conversations. Look, China came out today. This is, to me, was a huge story. I cannot believe I didn't hear this anywhere in the major media. China came out today. Look, Xi Jinping has made some commentary, some really strong commentary about wanting to be cooperative with the U.S., about wanting to have dialogue regarding tariffs, wanting to open up markets, Chinese markets to U.S. companies. I mean, it sounds like he is maybe capitulating to some extent. So look, who knows what 2025 is going to fully hold. There's a lot of change, it feels like, being talked about and being looked at moving into next year. If we get a lot of the positive but very little of the negative, look, that could be inflationary. We could see things start to grow to a point where it could be inflationary. If tariffs are implemented, they could be inflationary in a bad way, right? Because the company's going to pass the increase in prices right through to the consumer. So these are all things we're watching, The Fed's in a tough spot right now. I think they're going to cut next week, but I think they're going to attach some more cautious commentary to that cut. And it'll be interesting to see how the market digests that and what the market makes of that. I think right now, that's really the biggest piece of news the market's going to react to throughout next week. We do have a few companies that are starting to report. Some of them are including the first part of the fourth quarter. So it'll be interesting to see how those numbers look. But we're going to be going into a pretty quiet period. The last week or so, week and a half or so of December tends to be the strongest part of the month. It's not a surprise to see the market weaken a little bit mid-month. It tends to finish December's very, very strong on the years where Decembers are positive. So we'll see how it finishes out. I've got a lot of concerns, okay, heading into next year, and we're going to talk all about them here in a couple of weeks. A lot of concerns. My expectations for the market next year are muted in a pretty major way. I'm not expecting as much as maybe others are. I'm also very concerned about the level of optimism and bullishness in my industry. I can't find anybody concerned about anything. And all of these major bears that have been negative for so long are capitulating. They're throwing in the towel. They're all jumping on the bandwagon. That starts to make me very, very, very nervous about expectations moving forward. So these are things that I'm kind of tuning into and planning for. And we'll talk more about that in coming weeks. But for now, hey, we hold tight, continue doing what we're doing. For all of you clients that have brought in more money or new clients that have recently become a part of our firm, we're working your money in slowly, taking advantage of dips in individual investments as they take place. We're not going all in when markets are hitting or near all-time highs. We're taking a little bit more measured approach to work your money into the market. So with that being said, between now and next year, as you're thinking about your future long-term goals, all the things you want to do with you and your money, maybe it's go to Las Vegas, catch 2 concerts, one of them being in the Sphere by the Eagles, which I am told is a great concert. So if you're an Eagles fan, maybe it's worth taking a trip out to Las Vegas and watching them in the Sphere per a great client of mine that just came back from a wonderful trip out there. So maybe it's that. Maybe it's take that big trip, retire a little early, take that big ski trip. Got a client heading out there doing that. Hey, you know what your goals are, what you want to do. Don't just think about it. Think big. Think big. And I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.